This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. I'm Terry Evans, host of the Wealth Roundup, and we are ready to go for the week of June 19th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Patrick, I'm just looking over the last 5 days. Looks like there's a little bit of optimism, a little bit of recovery, and there's a green line on the graph for the most part when it comes to the markets.
Yeah, and this shouldn't be a surprise. The weeks leading up to the break that I took, and then even once we got back, we had the market struggling with this tug of war. Do we have a deal with Iran, or do we not have a deal with Iran? So maybe more positive than it's ever been since the end of March. Now, what we've been told is that probably the most sensitive parts of that deal, as the president said, under no circumstances do they want Iran to have nuclear weapons. That has not been hashed out yet. So I would caution investors to say that this thing is done, that it's completely in the rearview mirror, probably fragile. But at least what we're seeing it play out in the oil markets, because rather than having $100 US oil, we're looking at $88 US oil. And I was looking at the Western Canadian Select differential. It's actually tightened up a little bit since last week. So we were sitting at about a $17 difference between West Texas and Western Canadian Select. So that's down to 16. So certainly something for us to watch. So obviously we're very concerned about the high price of energy with regards to inflation. Inflation triggers higher interest rates. Higher interest rates restrict, capital in the market. So all these things are so interconnected. But yes, both the S&P 500 and Canadian markets over the past 5 days, both up just a little bit under 3%. So good news. Gold down, gold's down about $300, I think, over the past 30 days. So something to watch there. If we look at gold versus a broader basket of commodities, so there's something called the Bloomberg Commodity Index, which takes a look at things like agricultural products, lumber products, metals. Yes, there is an energy component in there, but if we look at a broader basket of commodities versus gold, is that in general that commodity index is performing better than gold. So something to take a look there, and I think tomorrow we're going to get a little bit of information from the new Fed chairman. All these things are very much kind of tying in together. And I would say maybe the last thing is Bitcoin has had a little bit of a recovery. So, we kind of talked about how Bitcoin, when Bitcoin gets taken out to the shed, it gets beat up really good. So, it's bounced off. So, if we're continuing to kind of create this narrative, what is Bitcoin? What will Bitcoin be? Is that I would say that for the last quarter, Bitcoin has traded less like digital gold and more like a proxy for the NASDAQ, or so more like a tech stock. And so with that being said, is that interest rates will be important to the Bitcoin story, and policy, U.S. policy with regards to, say, the Clarity Act and what happens in terms of the adaptation of various types of cryptocurrency into the U.S. banking system. So, those things are going to kind of play with Bitcoin.
We talked earlier about, I just want to go back to the oil, $100 a barrel oil compared to $80 a barrel oil. Is there a false sense of security that we feel when we see the price at the pumps going higher, but it's in correlation to what it's trading for per barrel, as opposed to when the price comes down at the pumps, we think, oh, great, gas is cheaper, but is that hurting our investments? Like, is that how it works?
So recall that usually when we're looking at the price of oil, say today, is that we are probably talking about the future delivery price for oil, so oil contracts. And we've talked about that on the podcast before, that we have to be kind of very careful about what that information means. And then here, being that Alberta is kind of an energy superpower, is that certainly here in Alberta, we kind of see both the positives and negatives to higher energy prices. We got lots of people, of course, are employed in the oil patch. The Alberta budget, when factors in oil prices, has a big impact in terms of our finances. But the price of energy factors into just about everything we buy, every input into the global economy. So that higher price leads to higher prices across the board. So we've seen in the past where extended periods of time with high oil prices can weaken the global economy. And I would say that is, it doesn't matter if you're an oil exporting country or you're an oil importing country, is that it creates pain, across the board. So I think consumers, especially going into the summer, where we know that that's the highest usage or demand for oil prices, is during summer driving. So any kind of relief at the pump, I think, is going to make the consumer feel better. But even at $88 oil, we were at $55 oil in February. We're still $30 higher. And the expectation is that, even if they're successful in hashing out, a deal that kind of sticks, is that we would prepare investors and consumers to say, be prepared for higher energy prices to hang around for longer. This is going to take a long time to work itself out of the system. But don't be surprised if, say, a year from now, we might actually potentially, this is a maybe, we'll follow it obviously on the podcast, we might actually see oil prices drop lower than when they were in February of 2026 if we were to go a year out. So we will have to see what happens, but at least into the end of the year, expect higher energy prices to hang around.
Every time I open up an article that's got something to do with wealth management or investment, everyone's talking about the SpaceX IPO, the initial public offering. And then I know there's other ones happening, but this seems to be the one that is really catching everybody's ear. What can we expect, or what should we expect, or how do we go forward with things like this and the SpaceX IPO in particular?
Yeah, so I think I was just listening to an interview with Elon, and I think he was surprised by the successful outcome of the IPO. I think he even, when he talked about when he kind of had the vision for SpaceX, is that of all of his businesses, he thought that there was only a 10% chance of success in this business. So I think we all wish to be so fortunate as the world's kind of first trillionaire now is. So the IPO price, 135 USD. Today it's trading at $216. Overnight, effectively, SpaceX has become a more valuable company than Microsoft and Amazon. I think while this is very exciting, the company raised about $75 billion for the business itself, which it can now put into more CapEx, continue to build out SpaceX business plan. I would say investors who are considering an investment in SpaceX need to think about the time frame for their investment, because historically, when we look at IPOs, is that once we get past the IPO date and we then look at the next 12 months, is that I think the average IPO on the U.S. market, if we look at the 12-month return following the IPO, is that the returns are less than 5%, meaning there's a lot of initial enthusiasm for the stock, but then there also becomes some selling. So early investors, do some selling later on to be able to kind of capitalize on that gain. So that's one point of caution. The other point of caution is that SpaceX is a company that loses money. So right now, if we look at their earnings last year, is that they posted a $4.9 billion loss. So, we've talked about on the Wealth Roundup consistently is that stocks tend to follow earnings. Here we have a business that is now one of the most valuable businesses in the world. It doesn't make any money right now. It doesn't make any profits right now. But I think we can look at this business, we can look at Elon's track record and say people that are buying the stock today are hopeful for where the stock will be in the tomorrow. I think the other important narrative here is there's only a quantitative amount of money and capital out there for investment. So in order for people to invest in SpaceX, they have to take their capital from somewhere else in order to do that. Now, if they're just pulling it out of their bank account, it's great. But I think what we also can assume is happening is that they're probably selling from some of their other investments. So maybe they're trimming from some of their other tech names in the portfolio. Maybe they're trimming from some of their tech names that they're maybe not quite as comfortable with the price, or maybe they're doing some profit taking and then deploying that money into SpaceX. So there'll be this bit of a vacuum that's created by the SpaceX IPO that will have other effects on the marketplace. So there's two other big IPOs that are expected for this year. So Anthropic and OpenAI. So both of these are AI businesses. So it'd be really interesting to see, whether or not the SpaceX IPO was a preview of these other big IPOs that are coming down the pipe, more profitable businesses than SpaceX is. So, and that too could have an impact on SpaceX current stock price, because there may be some profit taking on SpaceX to be able to create some cash to be available for those two big IPOs. So the key thing here is that there's not an endless amount of money to be able to hand out to all of these businesses, is that it's a zero-sum game. So while there's going to be some winners, and clearly since Friday last week is that SpaceX is the winner, is there's got to be some losers at the same time.
How is the Canadian economy doing through all of this? How much is it affected? Is it an island unto itself? Are we doing okay as we are kind of cross the threshold of the mid-year sort of thing here in June?
Well, certainly the stock market is one thing, and then the actual financial results of the Canadian economy are a second. So, we talked about last week Canada being in a technical recession, and whether or not it feels like a recession. Is that I think that we're definitely experiencing some regional recession across the country. And what I mean by that is that, as I think that right now, Alberta is probably benefiting from higher energy prices and a better performing economy than, say, the other two typical, drivers of the Canadian economy, Ontario and BC, where they're also seeing their real estate markets reflecting the fact that the economy is weak there. So there should be no surprise. We're still just a little over a year away from Liberation Day, where tariffs came into place. The Canadian economy is reflecting the fact that it's weak, and it's weak because of the situation with our relationship with the U.S. So while we see that, there are some other factors that are affecting the Canadian economy. Is that for the first time ever in history, the population of Canada has declined. It's the first time ever. And so that's largely has to do with temporary residents in Canada not having their stay in Canada renewed. So we're seeing a lot of people that were here in Canada under maybe a student visa or some other type of temporary visa are now leaving the country. And so those people had a economic positive impact on the country. They did things like bought a cell phone, created a cell phone contract. They were maybe out paying rent. Maybe they were out paying tuition. They were out consuming goods and services. And so they had this positive impact on the Canadian economy. So you can just imagine that if all of a sudden positive immigration goes negative, Canadian population goes negative, is that we don't have that growth coming from those people. And so again, we probably shouldn't be surprised. Now, on the flip side of that is that when they released where Canada GDP was trending, and then we saw these two consecutive quarters of negative growth, the day after we saw a really strong jobs number. Now, looking at these things in isolation, is that I would say economists want to see more. They want to see more information. We want to see if there's a trend. Are the job numbers going to continue to get better? Is the GDP in Canada going to continue to weaken? So I don't think we can necessarily go and put a rubber stamp and say the Canadian economy is weak and it's getting weaker, or whether or not we are perhaps at the bottom of a trough and we're about to see some overall improvement. A lot of the times, this economic information that comes out by the Labor Department or the Department of Economics, they get revisited, and that may either make these numbers worse or make these numbers better. I think the reality is that there are some signs of some positives, maybe on the job front. Canadian inflation is not nearly as high as inflation in the United States, so Canada's inflation is kind of staying in check. And then with regards to economic growth, is that it was barely negative. And so we're going to want to continue to see a trend. But I would say there's no way to sugarcoat this any more than kind of what we're seeing is the Canadian economy is weak and that we're going to want to continue to evaluate it. But the stock market doesn't appear to be getting worried about it at this point, and the stock market is performing fairly well. So watch for more news. The one other piece that I want to see is how the consumer is doing. So even though we don't see high inflation, is I want to see things like, does the real estate market continue to underperform? We're seeing average home prices down about 5%. We're seeing the average or the total home sales down year over year. I would want to see things like, are we seeing any defaults on things like mortgages and loans? Are we seeing defaults, popping up in the corporate world? Right now, those things seem to be in check, but something that we definitely want to monitor.
To adjust your wealth management or to start your investment journey, you can find Patrick's contact information at www.patrickmleonard.com. Please like and share this video if you're watching on YouTube. And we hope you'll join us next week. There you go. That's the Wealth Roundup for the week of June 19th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Thanks, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.